Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamowen, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Today, we're diving into the recent shifts in fixed mortgage rates as lenders pull back from aggressive pricing strategies. RBC, for instance, has increased its fixed mortgage rates twice in May, with its 5-year fixed uninsured rate now at 4.49%. Up from 4.29% in March.
It's interesting to see how lenders are adjusting their strategies. On one hand, we're seeing hikes in rates, but on the other, some lenders are still offering limited time discounts on shorter terms. It's a bit of a patchwork market right now.
That's right, Janine. The market dynamics are indeed complex. As Ryan Sims, a rate strategist, pointed out, there's more intensity in rate hikes on the uninsured front. The 5-year Government of Canada bond yield is fluctuating, and markets are currently pricing a slim chance of a Bank of Canada rate cut this week, with expectations shifting as we approach July.
And with inflation concerns and the potential for tariffs impacting data, it's clear that the market is bracing for something significant. Mortgage broker Dave Larocque mentioned that the Bank of Canada's hands are tied in the short term, but he sees room for monetary policy easing as beneficial for the economy.
Indeed, Janine. It's a cautious time for lenders, especially regarding uninsured pricing. Ron Butler, another mortgage broker, highlighted that lenders are raising rates to maintain their margins, even when funding costs remain stable. If the bond market stabilizes, we might see more competitive pricing return.
Yes. And it's important for borrowers to be aware that rate relief might not come until late summer. Summer tends to be less volatile, so we might see some stability then. For now, though, borrowers need to navigate this period of uncertainty carefully.
Absolutely, Janine. We'll keep a close eye on how things develop and update our listeners on any significant changes. Stay tuned as we continue to cover the latest in the mortgage and real estate world. Let's shift our focus to Toronto's condominium market, which is currently experiencing a significant recalibration. Experts are suggesting this shift is more of an opportunity than a crisis. With condo prices softening and inventory levels rising, it's certainly a different landscape than what we've seen in recent years.
It sounds like a new chapter is opening in Toronto real estate, Steve. For those who felt priced out or overwhelmed by bidding wars, this could be a chance to get back in the game. The average condo price in Toronto has dropped by about 7.6% year over year, now around $710,000. Inventory has surged by 28%, creating what seems to be a buyer's market.
Absolutely, Janine. Condo sales activity has decreased by approximately 30% year over year. The number of new condo sales in Toronto in the first quarter fell to its lowest level since 1990, according to Urbanation. This market shift is clearing out the noise, as Andres Lara from Lara Group Real Estate points out, making it more transparent and accessible for serious buyers.
It's not just about lower prices, Steve. For many, it's about the opportunity to find a home that meets their needs without the frenzy. Teresa Baird, a seasoned broker, highlights that buyers are taking advantage of this reset to re-enter the market with confidence.
Indeed, Janine. Both Lara and Baird emphasize that a strategic approach is necessary in today's market. They're advising clients to consider older resale units from 2015 to 2020, which often offer better square footage and layouts compared to newer builds. These units are trading at a discount and could be a more rational choice for buyers.
That's a great point, Steve. Buyers are becoming more analytical, focusing on value and lifestyle rather than speculative gains. Lara mentions that many of these condos were never worth their price tags. And now, with the market adjusting, Buyers are having more honest conversations about what they're getting for their money.
The data supports this shift in mindset. The number of unsold new condos has topped 23,000 units, the highest in over 30 years. Meanwhile, rental demand is softening, with average rents declining by 3.8% year over year. Analysts believe this reflects an affordability ceiling that both renters and buyers are hitting.
It's a bit of a reckoning for the pre-construction market, Steve. Builders need to rethink pricing and value as sub 500 square foot units at high prices aren't appealing anymore. Buyers are more critical and less impulsive, which is encouraging to see.
Exactly, Janine. There have been reports of more conditional offers being walked away from due to financing difficulties or changing buyer confidence. It's a sign that consumers are asking better questions and making more informed decisions.
Despite the challenges, experts believe this is an inflection point and possibly a generational opportunity. Andres Lara reminds us that markets like this don't last forever, and being informed and ready is crucial. The condo market may be down, but it's certainly not out.
Let's focus on the mortgage rate situation in Elliot Lake. With inflation creeping back up, it's an interesting time for home buyers and owners in the area. Dan Eisner, the chief executive officer of True North Mortgage, has been analyzing the factors driving interest rates, and there could be some summer relief on the horizon.
That's right, Steve. Many people in Elliot Lake, and indeed all across Canada, have been hoping for a decrease in mortgage rates, especially those with upcoming renewals. But with inflation pressures and trade-driven slowdowns, it seems the Bank of Canada is caught in a tricky spot.
Exactly, Janine. The Bank of Canada is primarily focused on controlling inflation, which is its mandated job. Despite a headline inflation reading of 1.7%, core inflation is over 3%, which is the highest since March 2024. This stickiness in inflation means the bank is cautious about cutting rates too soon.
And it's not just about overheated consumer demand. There are other factors at play, like tariffs and supply chain issues, which can create cost-push inflation. The Bank of Canada is careful not to make any hasty decisions based on inflation that might be temporary, like the recent tariff blitz.
True, Janine. Fixed mortgage rates are more closely tied to the 5-year Government of Canada bond yield, which has been on the rise lately. This isn't due to runaway Canadian inflation, but rather global investors pulling out of U.S. Treasury bonds, causing bond yields to rise globally.
Yes, and with the U.S. facing its own economic challenges, including a recent credit rating downgrade by Moody's, the ripple effects are being felt in Canada. The U.S. Federal Reserve's actions, like buying its own bonds, are also affecting global markets, adding to the complexity.
In light of all this, there's still a 75% chance that the Bank of Canada will hold rates steady at its next meeting, but a rate cut is possible if certain economic indicators align. Factors like GDP data, unemployment rates, and inflation trends will play a significant role in this decision.
For those in Elliot Lake, it's crucial to stay informed and ready. Even though the market is volatile, understanding these factors can help residents make better decisions about their mortgages. It's about being prepared for any shifts that might come.
Absolutely, Janine. As Dan Eisner pointed out, while the economic noise is significant, keeping an eye on these indicators can provide clues about potential rate cuts. This is a time for strategic planning and staying informed.
And for our listeners in Elliot Lake and beyond, remember that this situation is temporary. Markets are always changing, and being proactive can lead to better financial outcomes. It's about finding the right opportunities and being ready to act when they arise.
Our final topic today involves an important regulatory update from the Financial Services Regulatory Authority of Ontario, or FSRA. Recently, FSRA has taken enforcement action against Chandrakant Jindal. This action involves allegations that Jindal provided false or misleading statements or representations in the solicitation or registration of insurance. These actions are said to be contrary to Section 17C of Ontario Regulation 347/04 under the Insurance Act.
That's a serious allegation, Steve. FSRA is also proposing not to renew Jindal's mortgage agent license under the Mortgage Brokerages, Lenders, and Administrators Act. They believe his past and present conduct in both the insurance and mortgage sectors raises concerns about his ability to operate with integrity and honesty.
Indeed, Janine. FSRA alleges Jindal made a material misstatement or omission on his license renewal application, contrary to Section 10.3 of Ontario Regulation 409/07. As a result, FSRA is also proposing to impose an administrative penalty of $5,000 against him under the Insurance Act.
It's important to note, Steve, that Jindal has requested a hearing before the Financial Services Tribunal about these proposals. This means he will have an opportunity to present his side of the story, and the tribunal will review the evidence before making a final decision.
That's correct, Janine. This process is crucial to ensure fairness and transparency. FSRA's actions highlight their commitment to protecting consumers by ensuring that individuals in the financial services sector adhere to the law and operate with integrity.
Absolutely, Steve. It's reassuring for consumers to know that there are regulatory bodies actively monitoring and enforcing compliance to maintain the integrity of the financial services industry. It's a reminder for everyone in the industry to uphold high ethical standards.
As always, we'll keep an eye on the developments from FSRA and update our listeners on any significant outcomes from Jindal's hearing. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your home ownership goals. Catch you next time and stay informed with the latest industry insights.